to the next edition of the Unheated Podcast, a podcast by Thea Ventures, an early stage climate fund based out of India. Today, we're super delighted to have Marie with us from Powerhouse Ventures. Welcome, Marie. Thank you so much for being here with us.
Hello, thank you for having me.
Great. So, just a bit of background on Marie. She is a partner at Powerhouse Ventures, an early stage venture capital fund based in San Francisco, which focuses exclusively on solutions to digitize, democratize, and decarbonize our global energy and mobility systems. And Marie leads the investment team, the diligence processes, fundraising strategy, and has also additional responsibilities across sourcing and portfolio company support, LP relationships, and more. And Marie has actually overseen over 40 initial and follow on investments and helped lead the fundraising of the second fund of Powerhouse Ventures, which closed in 2022. This is a $75 million fund. She has an MBA from the Berkeley Haas School of Business. And prior to Haas, Marie worked in strategy, planning, risk, finance in groups across the oil and gas industry. So, really excited to have you here. Thanks a lot for taking the time. And I thought over this discussion, we can maybe sort of go through some of the thematic areas of where you invest at Powerhouse Ventures. Maybe we could cover a few companies, case studies of companies in your portfolio, and sort of the reasons why you went ahead with them and what kind of support you provide them as a fund. And then some of the sort of future strategies that you'd like to explore as you think about Fund 3 and maybe looking at markets outside the US, for example, like in India, which is where we operate. So yeah, just to kick us off, we'd love to hear a little bit more about the fund, the thesis and the focus areas, and particularly how a model of working with corporates and investors has helped you to find the right partners to invest in and also has given you additional advantage to the fund. Because I understand that before the Powerhouse Ventures Fund started, there was actually another entity called Powerhouse, and it was sort of functioned more as a sort of consulting arm and helped to connect startups to different corporates and built that extensive network in the valley for these energy and decarbonization startups. So would love to hear the link between these two organizations and then how you overall built the thesis for the fund.
Yeah, of course. Thank you so much. And thanks again for having me on. Powerhouse and Powerhouse Ventures are sister organizations. So you're exactly right. So there's the fund, which you spoke to, and I can speak a lot more to. So I sit on the fund side. But we also have what we call an innovation firm. And you're exactly right. They work with large organizations and help them connect into the startup ecosystem to advance their climate innovation goals. So companies with really robust innovation strategies who are looking for more specific solutions, all the way to companies who are new to climate innovation and are looking for help with understanding their business units and where to start. This or the that side of the organization does exactly what you described: consulting work, a lot of engagement. They maintain a database with thousands and thousands of startups that we've curated over the years, and that organization dates back way before the fund. So Powerhouse Ventures started over a decade before, when climate was not necessarily cool, kind of post clean tech 1.0 bust, and really started as a way to connect entrepreneurs who were working on solutions of the future and give them a space, an ecosystem, a community, a network. And so that's really the root of who we are. And a few, probably 5 or 6 years ago, the light bulbs really came up of, wait a second, there aren't nearly enough capital providers that will take risk for climate companies at the early stage, and there aren't a lot of ways for corporates to engage. And given the systems that we're in, corporates and incumbents have a huge role to play. And the closer they are to innovation, I think the better it is for startups and the better it is for them. And so that those two light bulbs were really what set the path for where the organizations are today. So, like I said, I sit on the Powerhouse Venture side, and you gave a wonderful overview. So, thank you. We're seed and pre seed focused, we're digital focused. And that really came about the 2017, 2018 start of the fund, looking around and seeing a lot of white space, just not a lot of capital out there to take the risk. And with the structure that we have, the ability to work with corporates and understand them, with a network that we've built for over a decade, and with a brand we've created alongside that network, we thought we had a right to play, basically, and to hunt and find and support really good startups. So Fund One was a small fund. It was a pilot fund. We were running $100,000 checks, $200,000 checks. We made 26 investments from 2018 through 2022, and off of that, had enough success to raise a $75 million fund too that closed in March of 2022. So really was about meeting the market where it was and it growing. We're very excited to be backed by a lot of great LPs now, Total Energies, Toyota, EIP, UBS, Fifth Wall, Microsoft. We're backed by some family offices as well. And I think most importantly, that ties back to our network and kind of people, human driven approach. We have a number of individual industry leaders that are LPs in our fund. And these are people who have made their careers in climate, who are excited to back the entrepreneurs of the future and give their time and energy in sourcing and diligence. We bother them all the time, and we're really excited to bother them, and we get a lot out of their expertise and their understanding. So I think the other thing to mention too of our philosophy is just around the digital side. We're not going to argue that there doesn't need to be a lot of heavy duty hardware innovation to meet our climate goals. We know that needs to happen, but we can get to something like 80 to 90% with technologies that are available today. So, given that this is the decisive decade for the climate crisis, we need to just act like it and invest in it, which means we need to get proven tech that scales and we need to scale it globally, to your point. So, if we can use and deploy software that buys us the 10 to 20 years we need for some of the commercialization timelines on harder, more intensive commercialization technology that needs to be commercialized, I should say. That's a role for our fund to play.
Yeah, absolutely. No, thank you so much for outlining, and wonderful to see how much, widespread industry support your fund has been able to garner, and particularly based on the network and the human-centric approach that you have prioritized during, the first edition of Powerhouse before the fund was created. So that's actually leading me to my next question before we get into themes, which is on, given that you have this wide corporate network and even the industry leaders that have supported your fund, how do you actually help the startups with this network? So, let's say a startup in your portfolio approaches you, what are the kind of questions that they need to answer to then be able to get introductions to, say, a Microsoft or a Fifth Wall? What the kind of, is it mainly on the customer side, or is it on the technology validation, or what's the sort of mode of assistance?
Yeah, it's a great question and something we're constantly iterating and redefining. So how we can amplify and use our network on behalf of our companies is something we're thrilled to be doing. We make introductions all the time. We track them. I think we made over 200 introductions for our portfolio companies last year, and these cut across a lot of different buckets. Some of them, like to your point, are introductions to potential customers. So target lists or people that might be interested down the line, or more business development, customer discovery. So we do a lot of that. We also do connections to each other. I think we've had instances where startups are grappling with a business model, selling into a really specific subsector. And even though we don't have direct experience there, we know 10 founders who have done the same thing in our portfolio and outside of our portfolio. And so making those connections too that help inform more strategic decisions. We also make a lot of connections around hiring. Tech has not been as healthy in the US this year, and you have a lot of people who are leaving or being laid off from technology jobs who are looking for climate jobs. And so within our network, I think we've seen a lot of that as well. And so trying to make the best matches we can of companies like ours that are growing and no longer need super climate specialists with really amazing skill sets, and how can we match that together? And finally, on the investment side, I think that's a really big role for us to play. Is we're very focused on pre-seed and seed, and so a lot of the introductions we are making are to follow-on investors. We take it seriously isn't the right word, but we know it's an important role for us to have relationships across tons of different funds who are looking for different things, so we can find the right matches for folks who are looking for their next stage of growth. So I'd say the kind of customer, strategic, investor, and then hiring are really the big buckets where we make a lot of introductions.
Okay, wonderful. I'm sure they really appreciate it. It's great to have an investor who is so engaged in, a startup's growth and, and overall in your entire story. So wonderful to see that. And on that point, many of the startups that you work with are very early stage, so maybe their idea or concept stage. So have you seen, I mean, I don't know about the actual statistic in Silicon Valley, but, a lot of startups start off with a great idea and then maybe don't end up raising enough capital to be able to last or to grow, etc. So in the energy space, and I know you only work with digital platforms and software, do you see any kind of differences with the kind of startups that do survive? And are there a greater percentage of startups that survive perhaps in the climate space? Is the way that they're going about building businesses slightly different than, your average sort of e-commerce, fintech, those kinds of business, consumer businesses? And given that the nature of the problem is so long term and sort of decade long, and we're continually going to be solving for it, how do you see that playing out? This the sort of average startup failure or startup survival
Mm.
rate within this industry.
It's a really good question. I don't want to talk too much about it, so let me try to be succinct. It's a really good question. We have had an unnaturally low failure rate across our portfolio. To date, none of our 38 portfolio companies have gone bankrupt across kind of five years at this point, close to 6 years. That is not that's not normal, I think, in venture capital cycles where the startup failure rate across, I think, market is close to 50% quote graduate to Series A. I do think climate has a little bit of a buffer just on what we are doing. To your point, it's almost countercyclical of what's going on in the market. Yes, obviously our market has been hurt by the broader macro trends, but not unlike AI and a few other sectors, I think climate is a space where despite interest rates, despite political questions, there's still a lot of investing that is happening. There's still funds being raised and a lot of funds being deployed. And so I do think there is money out there for climate startups that doesn't necessarily match the broader market. That being said, I think what we've seen too is given the industries we're trying to work with, we have a lot of really gnarly incumbents that e-commerce and B2B SaaS just don't have. Like working with utilities is just not something that you can shortcut. And I think being a specialist climate fund and understanding that, yes, we need to have strong fundamentals, keep burn low, be really scrappy and iterative on finding product market fit. I think there's things that, no question, climate companies have to do, like all startups. At the same time, I think with the right investor set, there is a little bit more patience. And I don't mean that in a lack of urgency, but I think in just an understanding of the way that some of our sectors and subsectors work. We're dealing with 100+ year old industries that have never had to adopt technology before. And we are living through a paradigm shift where that is a clunky, uneven process. And so, in some ways, I do think climate is a different type of early stage category. On the other hand, there are specificities to it that require just the right understanding going in. And I think we've seen that across portfolio. We had a company, have a company called Granular Energy. They're based in France and the UK, and they're working on 24/7 carbon-free energy. They have a platform to manage very granular RECs, basically. And that is a market tailwind that's really nascent. I mean, it's coming. They're doing amazing. They have some really awesome pilots, but going from not even thinking about it to yearly recs to granular recs through utilities is just it's a very specific type of business model. And so they were able to raise a pretty big seed round that'll see them through the time they need to just prove it out and get ready for Series A. So I think there's ways to really support companies doing it. But yeah, I think we get some benefits, but also have some hurdles that other sectors don't necessarily see.
Yeah, absolutely. And I totally agree with you that the incumbents have been there for hundreds of years, and it is really difficult, unless you have a very strong mandate, net zero mandate, to kind of convince them to move towards decarbonization, which in itself is a slow process. They're not willing to take in challengers, basically. So that's quite interesting. And you mentioned one of your portfolio companies, Granular. Would love to understand a little bit more about other types of companies that you see across the spectrum. Maybe would be great to know about the two or three latest companies that you invested in and what were the sort of thesis behind them, and what are some of the new trends that you're seeing new founders kind of adopting, and potentially AI or machine
Mm.
learning or any other forms where you think that the kind of innovation on the engineering side is heading towards.
Of course. Yeah, of course. I think. across our portfolio more historically, we've invested a lot in the maturation of renewable energy, a company called Terabase that's automating utility scale solar, a company called Raptor Maps that's becoming the system of record from a data standpoint for solar. We've invested across VPPs and DERs, kind of the first wave. I know it's coming back, but a company called Leap that's doing aggregation of behind the meter assets and bidding them into wholesale markets. They're growing super well right now. Um, we've invested a lot in modernizing the grid. So everything from better renewable simulations for interconnection in the case of Pearl Street Technologies to much higher quality load and now supply forecasting in companies like Amperon. So a lot around the physical grid as well. And then the last kind of big bucket that we've historically invested a lot across is decarbonizing the built environment. So companies like Audette that are trying to automate digitally the first step of energy audits and provide full decarbonization planning for commercial real estate, to Axiom Cloud, who is serving the very underserved cold storage and refrigeration sector of retail grocery and cold storage warehouses that have no tools kind of for energy management. And so I think historically, a lot of those themes speak to driving down soft costs, using kind of V1, V2 of AI and ML to drive efficiencies and to optimize and to really tackle a lot of like nuts and bolts of grid modernization that are like is just kind of step one, digitize and optimize. And so I think that's been a huge part of our thesis because there's a lot of demand pull there and they've been able to grow and scale really quickly. I think now, kind of moving forward, definitely generative AI. We're seeing a ton there. Our most recent investment, which isn't public yet, is in the generative AI space, a co-pilot for the grid play. So we're seeing a lot for the grid, actually. I think the grid is such a massive piece of machinery and has a lot of things that can go wrong, especially on the distribution side, that anything around better quality data and better decision making for control rooms, for field technicians, I think we're going to continue to see a lot there. We're seeing generative AI for very document heavy things, so stuff like regulatory and permitting and incentives. Our most recent publicly announced investment is a company called Rockrabbit, and that's exactly what they are tackling is an incentive engine for home electrification. In the US, the IRA has provided a huge tailwind for home electrification projects, and Rockrabbit is using generative AI to make a very actionable, very accurate kind of incentive engine for contractors and incentive providers to be able to actually use that information quickly, effectively, and to get just heat pumps into homes, just do the electrification work. So that was another investment we made recently. We're also seeing more in the hard to abate sectors. So as software players, we have been learning a lot, but not investing directly in hydrogen and cement and steel decarbonization, making sure we're paying attention. But I think as those industries start to move into true planning phases and development phases, there are opportunities now where software tools are value adding. So we have another unannounced portfolio company that is in the industrial decarbonization planning space, and really think the market timing is there, which is exciting. I think overall, like EVs, there's a lot in the news right now, but the tailwind is undeniable. I think you're part of the world, and in China and Latin America, it's a much different story. In the US, it seems to be a bit tangled right now with commercial vehicles pulling back a bit, but passenger vehicles still being pretty strong. I think technologies to procure, technologies to understand and finance that paradigm shift, and then charging solutions are still going to continue to be a big bucket for us kind of moving forward. And then lastly, I think bread and butter renewables, like we're never going to move away from that. There's still a lot to do. So we have an investment in a company called Taiba.ai, and they're building optimization tools for front of the meter storage, which is really exploding, not just in California in the US, but also Texas and other markets, and in really exciting ways.
Wow, that's a fantastic summary of the portfolio. So, super exciting technologies coming into play, and really interested to hear about the generative AI company that's about to be announced in your portfolio. I'm sure we could learn a lot from it as well. Um, and I think, what you said lately about, the industrial decarbonization space
Mm.
and hard to abate sectors, these are traditionally asset heavy sectors, but I would say, understanding and hypothesis is that eventually there would be software value add models that could come over and above these and help us do sort of predictive maintenance or digital twins. And that's a really interesting concept because mostly at least in our part of the world, we're mainly seeing the physical and the capex models, which some investors are comfortable with investing in and some are not. Would you say that, in almost every instance of the climate tech spectrum, there will always be a use case for software? And particularly, are a lot of these software models that you're investing in, are they IP or patent protected? And do they have, is it difficult to replicate some of what these entrepreneurs are building in terms of the platform architecture?
Yeah, I think to your first point, overgeneralizing here because I know there's going to be exceptions in certain industries with a lot of nuance. Like nuclear, for example, is not something I know a lot of people are talking about it and investing in it, and it's not something we've gotten particularly close to, I think, because of the very specific nuance to that industry. But I think generally we see a lot of or I would say generally we see a lot of similarities to what we've seen maybe in solar and wind, where you have a cost problem of the actual technology itself. And as you march down the cost curve and become more mature and more efficient, soft cost kind of starts to become the bigger bucket of things you can tackle and drive out of a system. So I think that's one similarity. I think another similarity is, or something we have also seen, maybe battery storage is a good example, where the people who are marching down that cost curve and getting really good at building panels or building lithium ion batteries are not necessarily the same people who are really good at writing code to get the most out of those assets. And I think as we've seen solar and storage start to mature, we've also seen the specialization of these players to be really good at something. And as these markets get massive, the slice that software can take, I think, is still very interesting and venture backable. And so I think as long as those things are true, like we're seeing a lot of opportunity. Maybe not right now, but especially down the line. Like there's been in the U.S. a ton of regulation coming out about what counts as emissional hydrogen and what is that going to be. And I think even companies like Granular, who are handling really complex hourly load and supply matching, can play of like what is green and how does it count and how is it regulated. I think those are opportunities. Same thing, I think, in steel and supply chain and cement. Like we are still in very nascent stages of those types of industries being mainstream, decarbonized. But as they walk down the cost curve and as folks specialize, I do think there's an opportunity. I do think there's an opportunity in probably a lot of these sectors for vertically integrated winners as well, but that's what we're looking for. And I think maybe the argument is, or the argument against software, I think can often be it's atoms and molecules, and software isn't enabling that. And a lot of times that's where the value is going to be. It's going to be in the asset and it's going to be in the infrastructure. And that's okay. I think our view generally is venture capital is like just this one small slice of all the climate stuff that needs to happen for our world not to be a disaster. And of that, software is an even smaller piece of that. And we understand that. And I think that's why we are so specialized and so focused. So to your point on protection and defensibility, I think we've seen it in a lot of different ways. A lot of our companies do have some sort of IP. Most of them have at least trade secret pieces there, but a lot of the secret sauce of our companies, especially at the pre-seed and seed, is founder market fit. Of are you someone who can both build the thing and get in the door? And I think in our industry, having both is actually an exceptionally hard thing to do. I'll use Amperon as a really brief example. They're doing really well. They started in load forecasting, and you have an incredibly rare and unique founding team where you have Sean Kelly, the CEO, who has been an energy trader for 20 years, but is also incredibly entrepreneurial minded and very excited to build technology. And then you have CTO Abe Stanway, who's a genius at ML, but hadn't really done a ton in energy before. And they managed to meet up and come up with this idea together. And they're using publicly available data. They nothing so cutting edge as to blow your mind, except their ML is just better. And for load forecasting and for traders and for people trying to make decisions about the grid, accuracy is the only thing that matters. And so for them, having the right team in place to solve the right problem with I don't want to undersell their tech stack. It's an amazing tech stack, but nothing overly proprietary, I'd say. That was enough for them to really create a monster amount of value for their customers and continue to grow. And so I think we want to make sure we're kind of catching a lot of that, but we focus maybe a little bit less on clear IP at this point and a lot more on founder market fit and if it's the right team to both sell the thing and build the thing.
Yeah, absolutely. Thanks a lot for clarifying that. And just to understand, given that you're finding these companies really early in their journey, how how do you actually find them? So do you have partnerships with universities or labs, or do you have a network of second-time founders that have been referred to you by your existing portfolio companies, or do you find them from other funds or accelerators? What's the sort of main sourcing channel?
Yeah, it's a really good question. And I think right now we have a few. So, one is we are specialists. So, we're early and we do a few things. And I think that actually helps a lot. We're very well networked within other investors. And so we have lots of deal flow from other investors. Hey, this seems like a great team, but it's too early for us. Or, hey, this seems like a great team, but we're only looking at, this sector right now. So we do get inbounds from our investor network in that way. I think just because of the way we are positioned. We also have gone out of our way to build our brand. We try to be out there. We host our own podcast that interviews entrepreneurs. We are easy to find, and we've had investments. Three or four of our fund two investments have come through cold emails to our hello at Powerhouse Fund account. And we have built a lot of systems to do this efficiently, but we take every opportunity seriously. We'll take a look and we make sure we're giving it the time of day. And being accessible, I think, is another way that we have built deal flow is being out in the world and then being accessible. I also mentioned our LP base and our broader network, and that is a huge source of deal flow for us as well. We don't know everyone, but we know a lot of people who know a lot of people. And so if somebody is pitching one of our LPs, we often get, hey, have you taken a look at these folks? What do you think? And we can kind of engage from there. So I'd say those are the a lot of where our sourcing has traditionally come from. We've also been working hard to build out research for ourselves as well, so we can be proactively focused too. So we've been doing projects on industrial heat and generative AI and carbon markets, kind of research to augment the deal flow that we're seeing, but also put us a bit more in the driver's seat when we find something that we do like, we can move a bit more quickly. I'd say at the early stage, it's a bit harder. As early as we are, it is a bit harder to be fully thesis driven. I think in a perfect world, I'd have everything mapped out, but the market's changing like every 2 months, and the companies are changing, and people are pivoting, and trying to balance that of both being opportunistic when great deals come our way, but also being thoughtful about the spaces where we're hunting and getting excited about.
Yeah, absolutely. I mean, from what I've seen of your profiles, at the fund, everyone is super thoughtful. I mean, I love the
Mhm.
write-ups that you have of each portfolio companies, why you invested, and also, the podcast that I've listened to and the kind of leaders that you bring on board there is really inspirational. So I have a sense that, every time you meet a new company, you probably know a lot about the sector, even if it is changing every 2 months or, there is new technology innovations, etc. The founders probably really appreciate you having done your research or having that kind of technical background, and even the business understanding of how the customer market works before you even have that first conversation. And that's something that we also try to employ at
Mhm.
Thea Ventures. We want to be those investors that come in really well informed before having that first conversation, because that's it just makes the conversation a lot faster. We feel like we add value. Even if we end up passing on the company, we add value to them, in that conversation, give them ideas,
Mhm.
thoughts, benchmarks of what's been built in other markets, etc. So it's a great skill set. And you mentioned on co-investors as well. So do you tend to invest, with other climate investors, or is it sort of sector agnostic? And I think you mentioned in your first fund you basically co-invested or joined larger rounds, but in this new fund, the second fund rather, you are mainly leading these rounds. So in both instances, how do you end up structuring the round in a way that is favorable to your yourselves and also value add to the companies. I'm sure you have a good network of investors and folks that want to be in these rounds. So just curious of how you put them together.
Yeah, thank you. You're right. For Fund One, it was just one variable taken off the table. Our checks were too small, and so we were kind of price takers and seeing if we could help out, add value, and get in the rounds where we could. And I think going into Fund Two, realized that we learned quite a lot. We feel a lot more confident in our ability to do a good job as a lead investor, take the board seat, syndicate the round. So we've been doing a lot more of that. I think about half of our investments in Fund Two are lead or co-lead. The other ones were just part of the syndicate. Um, and yeah, honestly, our principles are pretty simple. Like I'm fiduciary. I got to look out for Powerhouse Ventures. We need to do what we need to do. So there's some conversations on equity stakes and making sure we're aligned with what we told our LPs we were going to do and what makes sense for our fund math. So I think that's obviously one thing that we're thinking about. But the second principle is fairly simple. We're really on the trust to control spectrum of founders. We're really far on the trust side. And so if we're investing, it's not going to be to tell you what to do necessarily. It's going to be a sounding board, to ask hard questions, to get you resources, and to make sure you're in good shape kind of going into your next round. And for that, we often rely on the founder and really dig in of what are you looking for? What kind of help do you need? Who makes you most comfortable? Who's going to challenge you? How do we put those pieces together in a way that the founder feels great with? And that's often our uh, biggest North Star. I think the benefit of climate investing is there are sharp elbows sometimes. Like we've had to fight for deals. That's always going to happen. But at the same time, there's never a lot of pushback of, hey, there's someone really strategic who wants to come in for 50K and this is going to help my commercialization strategy and I really want them in. It's like, great, we'll find a way to bring that person in. So I think being flexible and fairly collaborative within climate has helped a lot.
And on that subject, are you seeing a lot of sector agnostic investors now coming into climate and wanting to have that portfolio with a few climate deals sprinkled in? And, some of them, are writing very large checks as well. So curious to understand, as you think about the capital stack and where growth capital comes in, because one of the issues we're facing in India, or
Mm.
wouldn't say issues, but it's just an early nascent ecosystem, is that there are a lot of folks who can write the early stage checks. So basically anywhere between like say $1 million all the way to like 10 million or 12 million, etc. But then after that, we tend to look at other investors from overseas who can then invest in India. So these are usually international divisions within larger sector agnostic funds that have the capital to do 20 million, 30 million, 40 million checks coming into India. And then we have the later stage private equity folks, but the climate at this stage has not reached, that
Mm.
late growth D and E stages or pre-IPO stages. So I'm just curious in your case or in your market, do you see enough appetite for the Series B plus funds? And are these coming from climate funds or from sector agnostic funds?
It's a great question, and I think it's a bit of both. And it's I just talked to somebody from Decarbonization Partners recently, who Decarbonization Partners is a BlackRock Temasek kind of JV fund for very late stage early growth, and they want to write 50 to $100 million checks. And it's amazing that there are funds willing to write checks of that number, and that they are one of many. So the US capital stack has definitely evolved over the last few years. And the fact that we have some of these larger players that are specific on energy transition and specific on climate is a big step forward. Um, that being said, I think even Series B, Series C, there is a lot fewer, a lot fewer funds who are just climate focused, which makes sense. I think the return profiles of what these funds need, it can be hard to see a single sector returning, all of those dollars in a pretty concentrated way. So I'd say my answer, I think, is a bit of both. I think we often are co-investing with climate funds through Series A and through Series B. I think that's been a theme. So for Terrabase, for example, their Series B, Prelude, Breakthrough Energy Ventures, Fifth Wall. I mean, these are kind of top tier climate funds that helped raise their series. For Amperon, their Series B was led by Energize Ventures, and we love Energize. Their themes and investment thesis is a lot like ours. So climate specialists who really leaned in. For Leap, they had a mix. They had USV, which is a generalist fund that has moved into climate over the last few years in a concentrated way. They had Park West, which is definitely just a financial um, investor. And so I think starting to cross the bridge a little bit between just climate folks and generalists. So I do think there's a mix and in all of the above. At the same time, seeing more climate funds at the late stage that I think make this a little bit easier. That being said, late stage did not deploy very much last year. I think last year was a really tricky time for late stage funds. So I think conceptually the funds are out there. Whether or not they're going to be deploying more this year still remains to be seen.
Got it. Got it. Thanks a lot for that. So as we come to, the end of our discussion, I just had one or two last questions to ask you. One is, we've alluded to the fact that, we are a climate fund based in India, so in the global south, and curious to know if you think that there are any cross-pollination opportunities between your portfolio and, the Indian market, or, are there any potential new opportunities that you could be looking at? I know that there is generally a regulation of about 25% of your fund only can be invested outside the US. And I know you have one or two investments in Africa. But what is sort of some of the considerations that you would look at before expanding to an international market or having your portfolio companies expand?
Yeah, it's a great question, and that's why we're so excited to know you and how you're building the fund with such a specialist focus. Because I think we've been able to be successful where we are by being a bit focused and knowing our market and knowing the networks that we've built can support that market. And I think we want to be really humble about going into markets like India that are so rich and have so much potential, but are also really different in a lot of ways from the US market in ways that we may not fully understand and appreciate. So I think I think overall investing in the global south and the kind of the eastern part of the world is critical. These are massive markets from just a financial point of view, but also grossly and disproportionately affected by the climate crisis. And I think because of that, innovating quickly and in exciting ways that we're not seeing in the US and Europe. And I do think there is a lot of potential there. We have more work to do, I think, to be good stewards and good investors in those markets. And I think step one has just been getting to know folks like you and other expert investors in these markets. For fund two, unlikely for us, but with our both of our funds, we are very comfortable investing in companies headquartered in markets we understand, but are operating globally. And so we do have a few investments that are operating on the continent. We do have Terrabase was global from like day one. They were building stuff in Qatar and Vietnam and all over the place, just because that was the team and the solution. So we're very comfortable, I think, with the right team on expansion. And we have some LPs like Tom O'Keefe, who is wonderful, who kind of lives in both worlds, especially the US and India, who has been helping us understand and bridge a lot of these entrepreneurs as well. So I think there are just themes that we are not going to get exposure to by just investing in our current markets, that it would be a good fiduciary thing to make sure we are looking at for kind of future funds. So we're excited to kind of stay in learning mode, I think, for now, make sure we're understanding, and especially for entrepreneurs coming to the US where we can be especially helpful, making sure we're making those connections and building those bridges.
Great. No, we're really excited to collaborate with you at some point whenever you decide to invest in India and to show you around and be your sort of eyes and ears on the ground, as it were. But I think that's it. That's it for today. But thank you so much, Marie, for taking the time to chat with us and share your extensive knowledge of the space. Really so much to learn from all your background of investing and particularly the incredible portfolio companies that you have, that you interact with every day and the new ones that you're adding into your portfolio. So, really keen to sort of stay in touch and to keep our conversation going. But for now, huge thank you and gratitude from our side to be involved today on our podcast.
Thank you so much. I really appreciate everything you have done building your fund and investing and starting these podcasts and making connections. I mean, you've been amazing in the space, and so really glad to know you and glad to be here. So thank you again.